Hey guys, happy Saturday. So let's just go over Bitcoin and let's see what we can do to map out to see if we can find some entries and exit points based off the historical chart pattern going back. So a lot of times people don't know when they should take profit. When should they enter in or whatnot. So what I like to do is I like to go back and I like to see where maybe we could have had a better exit plan. But for the most part, my exit plan has been pretty good and solid, using some of the Fibonacci extensions and other market structure. Okay. Also, if you hear my dog barking and if you hear any other noise, I got some kids in the house. So that's that, being a life of a parent. All right. So let's go back in time and we'll do a couple bar replays to help us gauge how we can approach this market. So what I'm gonna do is I'm gonna use a few different tactics that'll lead to how we could have, um, you know, dictated where we wanted to get out in the future of this market, etc. So I probably come up with like three to four different strategies that we can use in this video. So I try to move as fast as possible. All right, so the first one, we had this nice little impulse wave up. So what do we want to do? We want to go ahead and we want to measure this using our Fibonacci tool. All right, we're going to go up here. We're going to bring it down. I am on the log growth. I'm sorry, not log growth, but the log chart. So it's going to condense down so that we can fit more data onto the screen. All right, so on my extension, I have multiple levels. I have added levels. So we got one, two, three, four. So I got five different levels on here. All right. What we want to do is we want to be in this is the area where, okay, um typically our first and second target. And with this, let me do something. Let's extend this right. Cool. All right. So typically this is going to be the first zone, but we also want to pay attention to the other ones. Okay. So in a trending strong market, of course, these are going to be zones too. But what we're going to do is we're really just going to focus on the first one. Sorry, I'm going to do this. And the fourth and fifth one. Okay. So this is what we're going to focus on. All right, we're going to take this off. And as you're going through this, imagine you taking profit at these zones, and we'll figure out how we're going to re-enter. Okay. So when you're in a asset like this, you got to ask yourself, like, what does it really look like to take profit? You have to go through these simulations. You have to, or not. What's going to happen is you're going to wind up unloading everything at one price, and you just wouldn't really know how to work it moving forward. So that could be a little bit detrimental. All right, so let's play this. Play it fast. And this is the daily chart. Let me pause. You see this wick down right here? This is a great entry level. So, of course, look where it's at. Back to where? Market structure. Bam. This would be an area where you can start to load and get in the trade. Like I said, this is way better for investors because you can handle any drawdowns. All right, so first two targets hit. All right, we good. So let's pause this. All right. So first two targets hit. Question is, how much do you want to take off the table? 10%, 20%. You see where I'm going with this? You're gonna have to come up with what you want to do. Okay. So what are we gonna do next? All right. What we're gonna do is we're gonna set this as a region where we're gonna measure. The next time we measure impulse, we're measuring it from here. Why? Because this was the last major low before it broke what? This level right here. Right? So this was a level the price broke. Okay. So when we measure our next impulse, it's going to be from this green candle right here. All right. And we're going to wait for a major correction, and we got one. All right. Where we at again? All right. Market structure again. So, all right. So every time we break structure, what you want to do is you want to be able to mark that as it moves. We could take these targets off because we already hit them. Now, these targets can serve as an area where market can come back. Okay. So, what do? Measure. Take out what? Extension tool. Take it up to the top. Boom. Bring it back down. All right. Now it's time to set our what? New targets. We got our what? Level 1. And then we're going to stick with this. Level 4 and 5. Take this off. All right. We're accumulating. Play. Targets hit. All right. Other target hit. Third target. All right. You see this? All right. Now, question: how much did you take off the table? I'm not going to answer for that. I don't know. That's part of the planning. How much did you take off the table over here? Okay. Did you buy back some? All right. Because look at this. If you bought back for what you took off the table on this little rally here, you're eating. You're doing very well. Okay. Now, because you took off here, of course, you're buying back a little higher, but you get what I'm saying. And there was some little drop down back here. If we stretch this out, you'll see that there were, see this little candle, because this is daily, and that was probably significant enough for you to see the profit taking back down in this area is decent. Okay. And at this point, at this level, Bitcoin was $264. Right? At this level right here, it was $84. Now look, we're looking back in time. We all know what Bitcoin has done. We would have never known it was going to do this. So hindsight 2020. All right, it is what it is. So don't beat yourself up. Oh, I wish I would have did this back then. Nobody knew. So now that we got that out, there's nobody trying to act like this is perfect, right? All right, so all right, we got a nice little correction. You can buy some more here if you want. If you don't want to, it's fine. All right, but these levels have been hit. So let's see what happens. All right, look what happened. Came back a what? This would be a what? A demand zone. What are we doing? Buying in the demand zone, right? So guess what? Whoever bought back here, they're still actively buying, but they're buying at higher prices. But they're buying based off a real, true established position that was established back here, and they're accumulating and they're allowed to have distribution over time. Right? What is this? It's still a what? A demand zone. This is more buying. All right, what are we looking for next? All right. Remember, we already measured from here to here. I'm sorry, what was from here to here to get these targets. So what's next? Okay. It's gonna be here to there because we got this next pullback. All right. So let's go ahead and measure here to here. Bam. I'm gonna take these off. this one up here. Another buying opportunities right there. I think I already said that. This is going to be area we're going to measure from if we break what this area up here. So I'll go ahead and put a level. We need to break this. Right? This will give us a new impulse where we want to measure from. All right, targets hit. Both targets hit. Second target's hit. Third and fourth target hit. All right. So now that we got this done, now look at here again. Look at this drop. What do you have? Market structure. What happened? You can what? Somebody could have looked to buy more right here, right? All right. So listen. So these targets will be hit. So what's going to happen? We take those off. Once again, how much are you taking? Okay. Now, what do we want to do? Measure from here to here to get our other targets. All right. Stretch that for you. And then what we're going to do again is going to be the levels we're looking at. And this level up here. All right. Here we go. Bam. Boom. Play. All right. Those targets hit. Blast through those. Right, got a nice little pullback here. Pull back in the zone. Can accumulate some. Got a nice little level right here. That was set. So you see all these blue lines on you. You see sometimes price respects it. That doesn't mean it has to all the time. It can break through. But these are all former levels that price can come to. Like I know people think that Bitcoin can't come back down to $204. I mean, you can't say it can't. I mean, I'm not saying it will, but it is a valid level that's still in play over time. All right. So we got a nice little breakdown right here. We came to this level. And let me pause this. So you see what happens over time is that what these levels serve as support and resistance levels. And anytime they're violated, what happens is we can look and say, okay, where's the next level? So, like, if this level was violated, then this will be one of the major key levels left. Or, of course, you got this one too. So, of course, we will have this as a level, but I don't want to put too many on here. But this will be a level, all right? So, always remember that it's not like a vehicle just blast through stop signs. Like, you got to stop at these levels and respect them. So, what are we doing? All right, so this is going to be what? An area that we're going to measure from if we get a nice impulse to go above here. So let's go ahead and take these off while it's moving. So this is a good accumulation zone. We could have bought in that area. All right, so we broke above. Let me pause it right quick. All right. I forgot to do my measurement. I'm sorry. So let me measure. Got to do that for you guys. All right, bam, measure, bring it back down. All right, boom. We already hit that target. So I'm going to go ahead and put it on here for you. Boom, bam. And we're going to do what? Target what? 4 and 5. All right. Now, the other targets are targets too. You can get out of that level. But this gives me what we call the front and the back of the move. Some of you may want to go in the middle of the move, but this gives me the best of both worlds. We can hit profit up here, and this would be what we call the home run hits. All right, so look, this hit. What are we doing? You're taking profit, taking something off the table. All right, on a retracement or retest, you can add on your positions. All right, and if it keeps retracing, okay, you got different levels of where you can add it, but you got to have a plan on how much you want to do. So let's say you got, I don't know, $600 you want to invest. You can break it up in increments. Like, hey, I'm only going to do 125 at certain levels. All right. So you just got to be strategic, but you just got to come up with your own plan. All right, so we got that set. All right, this is an area where we'll measure from again, because this is the last major dip before we took off, right? All right, so we can pause this because what we see that we had this area and we had a drop off. It's pretty significant. So we're going to measure this, and now we're going to get our future targets. All right, we still got one more in play, which is above, but we're not going to probably reach that. All right, so let's bring this down, and luckily we already got this zone marked, so we're good. So we're going to go ahead and go up to the extreme. Okay. And based off of that, we're looking at a Bitcoin price point of 269,339,000 region based off of this. All right. Of course, I could play this. We already know what's going to pretty much happen. All right. We're in what is this? Accumulation. All right. So this is the zone for accumulation. Now let's stop this. All right. Let's get our zones marked. All right. This was a zone that we have to pay attention to right here, which is 14,000 region. All right, we got another zone right here, which is 19. All right, and since we already broke through here, do this, and we can do this. All right, bam. Okay, now we got our regions, and we'll be accumulating based off if those levels are violated. And you could be taking profit on this drop off. All right. Now, what's the thing you don't want to do? We probably should. Nobody should be buying up in these areas, right? Right. Got this level broke. What happened? Went to the next level. Okay. We broke this level. So what's next? This one, which is around 14,000. So between the 14 and 13,000 on the region, we can suspect that price probably will break down and get to these levels. We do have a pattern that's shaping up to look like it's going to shape up for that. This is a form of a classic bear flag that has already started the descent to break. Some people call this a H pattern or whatnot, but it's really a flag pattern. See the flag forming right here, and then you got a break. So this is a level where we really need to keep our eye on and see that we possibly could visit. All right. Now, does it mean it has to do that? No. I mean, we can stop here and we can fight back up here. But watch this, guys. This is a huge zone. Okay, there's nothing to say that Bitcoin cannot come, ping pong back and forth in this area. Create a another triple top, quadruple top, whatever. It has this, and it can do this. Right? Come down here and end up at close to 8,000 some change, 9,000. But that's just respecting the charts. All right. So we see how that played out. Guess what? We got this level left. All right. The next level is 85,000. I didn't mean to move that. 85,000, 86,000. Top, we're talking about 110,000. And then we're talking about a 270 plus whatever, right? All right. So that's good. Now, I'm not going to go back and do a whole entire bar replay, but I'm going to show you how you can measure without using the Fibonacci tool. So you can just measure the impulses using a regular trend line. You're going to go vertical. So I'm going to do this, bam, and I'm going to set it on top. All right, and then what? You can set this as a target. So you got your target, go like this, something like that. All right, so I do the same thing. Take it from here, here, to here. Sitting on top, see how it comes right there. A little crooked, but you get what I'm saying. You can just measure. And you can set your targets just like this. Bam. All right. Now you can do this. Come down. Take it from this is the bottom right there. That the last major pullback up to that level. Again, and then you can set it on top, just like that. All right. Of course, this is another area where this is 236,000. Just basically what I did with the fibs. So based off all that, this is what we're looking at. Okay, so we're still on track. So that's two ways you can look to get targets for your upside. Now you can use uh, the actual moving averages. So we're gonna do another bar replay for a little bit. And what I want to show you on the moving average, what you want to do is that you're only going to buy when price is either it touches the 200, which is the green one, and it dips below. That's the only time you'll really be buying. All right. If you notice on this chart, you don't see the 200 right now. It's because it doesn't have 200 candles. You got to have a minimum of 200 candles on here for the green. So when the green shows up right here, that means it's 200. So what happens? Price is what? A little bit below the 200. So what are you doing? Buying. Okay. You cease buying once price is above. As long as price is below or right at it, we'll start buying. Okay. So no more buying until it does that, right? Now, there's a couple ways you can do your selling. You can do your selling when price touches the 50, which is the yellow. Okay. And the red is the 20 moving the average. So let's play and let's see how that works. All right, now, bam. All right, so what happened? You're selling because what? It dropped what? Below the 50. Now, you can do below the 20 and close below. Okay, so we got a nice little daily candle. All right, and then we rallied back up here and then this closed. So on your rallying, you when this candle closed back up, you would have took profit. So you can do that too. I don't like using the moving averages for the most part as a target, but maybe you can perfect it and you like it. I'm just showing you different ways you can do it. All right. We had multiple candles close below two. This is a what? Death cross. All right. Because why? A smaller moving average cross below a larger. So the red cross below the 50. All right, so that's a death cross. So we could see some downward pressure because of that. And then it had a let me see. So the red cross, and then the red went back over. So it was a death cross, then turned back into a golden cross. And technically, that's not a. I'm sorry, I said it was a death cross. Death cross is when a smaller mover average really crosses the 200. Sorry about that. All right, let's see what's happening. All right, it's moving fast. All right. Once again, what it violated one of these, closed above, closed below, take profit right here. Even though this candle it wick down here, you probably like, oh, I'm gonna get out. But look at the strong rally. It closed. You good to go. What happened? Buying. We're buying where at the 200 and anything above or below, we'll start buying. So we stay buying, buying. Like I said, I don't like the selling aspect of the moving averages, but I like the moving averages for buying. I don't like it for selling. You see this below? Look at this. This Bitcoin's at $85. It's a steal. Look how many people just get something strong came in the market, created what a wick. It's below the 200. So if I was you, I would really look at the moving average only for buying purposes. Like I said before, it's a better measurement than focusing on selling because you're gonna get a lot of false signals. Okay, when should you be buying? All right, boom, look, buy, boom, all right, buying. That's it. Buying below, still buy. All right, still buying some, accumulating. Look at this, stayed on here for about 15, 16 days. Oh, I'm sorry, 17, 8, well over 20, maybe 25, 30 days below what? The 200. So that means you should be accumulating. What are you doing? Still buying until what? It breaks above and close above. Still buying, ceasing. Now, this doesn't mean you have to buy every day, but you get what I'm saying. You just know that you have a better opportunity. Right? It's way below. Look at this. This is all accumulation because you're what? Below the 200. You see how it lets you know that we're in bearish territory. Stop. Maybe accumulate. People be asking, "Hey, what are you buying?" Yeah, nah, until you hit this, I'm not doing anything, right? So, like I told you, I wouldn't use this to get out. Look at that, couple of touches, some buying opportunities. All right, so I'm not gonna keep this going forever. Let me see. Fast forward this all the way to where we at now. You know, it's not. It's yes. All right. So, guess what? What are we doing? We should be. You already know. I don't even have to tell you, right? Because we're below. This is real time now. We're below the 200 moving average, right? So this is where a lot of accumulation, all in this area, all this is act as a resistance, and we keep dropping down. Now we're getting very. This is getting into a wide state. Prices this wide. eventually it's going to have to try to fight to get back above. All right, these moving averages are serving as a resistance point right now. Okay, so now, do we have an opportunity where price can come back and start crossing some of these? Yes, but we got a lot of levels we got to play with. We got to play with this level, which is a main level, but you could find some opportunities possibly in the trading world. So like the 28K region is a strong one. And, we got to break all these levels coming up to the upside. So we got that level, and of course we got this level right here, right 37, which all can happen. Right, so watch this. Let's take this off, and we're gonna pull up our Fibonacci retracement tool, and we're gonna see from here on down where we currently are, what type of retracement levels are we looking at if we drag this down to where we are right here, considering if we keep this. All right, so look, 23%, we're talking about a 24K Bitcoin, 38%, 29, 50, 34. All right, so we got the golden ratio sitting at roughly 40,000 region. So imagine what a $40,000 Bitcoin would look like. Now, watch this. Bitcoin could do this. I mean, it could look something like this and be right back up at 45. Now, what's this going to scream? Oh, we're going back to all time highs. We're going to break it. Maybe not. Why? Because this is just a retracement of this whole entire move, and it'll be right here to 70%, which is a real good level. But also here to 78, and all of this lines up with all these market structures. So price could what? If anything, the only reason why price is coming back up here is to get off of positions that they did not get to sell at. Right. So imagine someone, a big player up here, got 100 bitcoins sitting here that did not get sold, so they want to come back up here to do it. And what is that? 100 bitcoins times 40. What is that? 40? Is it 40? I'm just going to use flat numbers of 40,000 times 100 should be. All right, so that's 4.4 million, $4.5 million worth of Bitcoin that's sitting here that maybe somebody want to sell off. All right, and then price could come back down this way. But here's the thing: these are key levels. Okay, we have a retracement level. All these levels that we can visit. Some people get to make money on the futures market. Some people can make money just playing their cards right and maybe trading some altcoins to get back up in this region. It'll be fine. In fact, um, let's look at a couple like just a few. I'm not gonna do a lot, and everybody's not gonna have a lot of good data. All right, so let me take this off for sheet. And we're gonna do this. We're gonna take it from here. We're gonna drag it down here, and then what you're gonna see is you're gonna see nice levels where we can visit. Okay, this looks like this could be a inverted head and shoulders. We could push back up here, but here's the levels that we can visit. Okay, we got 38%. We got this level. 50%. We got this level. 61. We got this level, and up here. Now watch this. Here's the magic. Let's pretend that we are taking trades to come up here. So you got if we get back to the 61, we got 250% gain on the money. Okay. So let's go through this fast and look and see which plays, all right, and have a nice, and we can enter in new positions with a hopes that, hey, we can take these trades, like I said, to the upside. Um, Look at this, to the 61 track, beautiful, almost 500%. If we can get to 70, you got 670% gain on your money. That's not bad. All right. Go up here to about the 78%. We're talking about a 916%. Let's look at Cardano. Finance, same thing. All right. Measure. All right. So right here. So back to go to ratio 207, 270, you know, etc. So we could have a rally with. It's not really a rally. It's just correction. Right? We hadn't had a major. We're in a major correction of a bull trend, but we hadn't had a major correction of the bear trend. So we're in a bearish move. We haven't had anything. And watch this, guys. I mean, like I told you before, we could come down here and do this, like everything come in, and then that, like we're in a currencies market. Like we, this happens all the time. Like it's not like it can't happen. Okay, so you gotta think of that, right? Look at this area right here. All right, and if you look at the shape of it, okay, what do you look? What do you see? You see the same type of shape, right? See this? See that? See this? Same. It's just a bigger. Okay. Look at this. The structure is shaping up. Could move higher. We could see some bullishness come in. Now I'm not trying to give y'all some false hope or anything. I'm just saying that that could possibly happen. Right? Because all it takes is just a bigger players come in the market, put enough buying pressure in, and it wasn't gonna happen. They're gonna have more people coming back in. Oh, the market's moving. I'm happy. I'm happy, and then they're gonna miss the what? The demand zone. All right. So where we currently are right now, we're in demand zone. Look at this price. Look at this. Look at this level right here. Where price? This is demand. Okay. So we are in the demand zone. What is this up here? This is the supply zone right here now. So we got to be careful. When prices get back up here, we may drop off. Right. So I may do a separate video. I don't want to keep this going long. It's getting a little too drawn out right now. But I want to show the Bollinger Bands in the next video. We can use the Bollinger Bands as a way for us to exit out of our positions and enter into our positions as well too. So all right. So y'all subscribe, hit the like button, keep it thorough. Keep your heads up. Um, I do believe that Voyager will recover. Everything be fine. Your assets will be fine. They're working already. FTX already has taken on a considerable amount of ownership with 11% stake in the company. So they will have some more reassurance and backing financially. Also, E Trade at the table. So hopefully, you guys will have some form of peaceful weekend, 4th of July, uh, knowing that, hey, we all in this together. Crypto is volatile. It is a crazy time. I get it. But trust me, this is where a lot of the wealth is actually built. Okay. It's built in conditions like this. It's hard building wealth and playing it safe. Right. So y'all have a great one, and may the horse be with you.